Today is the 18th of October and an update for sterling US dollar. And the last coverage of this currency pair, which was on the 11th, identified the potential small development that the market was no longer declining in fives and rallying in threes. It was actually now potentially declining in threes. And if we just look at the 6th of September and the start of what was to be a 5-week decline covering around 1700 pips, that actually commenced here in this hourly chart with this 1, 2, 3, 4 and 5, an A wave followed by a double zigzag into the low and a very shallow and failed C wave, because this is a failed C wave because it didn't succeed in taking out the termination of wave A. It's purely just an expanded flat. You can see the strength in the market that this failed C wave failing to come past the termination of A and the prelude to this 5-week 1700 pip decline. But this is in fact the start of that with a 1, 2, 3, 4, 5 A, B, C, and that's listed on the daily chart just here with a 1 A, B, C, 2, and then the market continues to decline, and we've covered this many times in the structure and the contents of this 5-wave decline excuse me, and the 5th of the 5th, which produced the very large and very fast final spike down to the downside, with the market, as I mentioned, just staying at this price level for a mere 60 seconds before immediately retracing. And it's that retracement which has now become of interest, because if this 5-wave decline is complete, then the market was declining in fives and rallying in threes as covered on the 11th. That would now need to be rallying in fives and declining in threes. As this advance here was covered with previous video coverage, that there was a 535 X 535, so it was rallying in fives and declining in threes. At the completion of it, the market reverses, and rather than declining in threes, it now starts to decline in fives and rally in threes, decline in a 5, rally in a 3, so on and so forth. So if we're looking for this 5-wave structure to now be complete, we would need to see, even if it's a correction of this 5-wave decline, you'd need to see the market rallying in fives and declining in threes. And if we look at this sharp retracement and this singular thrust here can be counted as a wave 1, we do indeed have a 3-wave decline, 3-wave rally, and then this decline here. Then we've had a support at a 50% retracement of this rally, the market has come down and then it's rallied again, a possible ABC. Now, a point to mention here, if this is incredibly early to label this as a 1ABC2, 1ABC2, that remains to be seen if that is correct. But the important point is this: if we look at the start of this decline with a small 1, 2, 3, 4 and 5 from the 6th of September, this small 5-wave decline was the start of a 5-week 1700 pip decline here, and shown here in the daily chart. That tiny 20-hour decline was the start of this. What this is the start of remains to be seen, because how far and how fast, as I keep mentioning, and how complex this will be remains to be seen. And all we can continue to do is to try and understand and update this as it unfolds. And if we just fast forward to bring this to here, since this 50% retracement here and this price rally up followed by what could be labelled as a further correction, you can label that as a 1, 2, 3, 4 and 5. Indeed, this morning there's been a further 1, 2, 3, 4 and 5 with a question mark here. So are we building a series of 1, 2, 1, 2s, and now we're going to start to see the market continue higher? That remains to be seen. But the longer that this price action here proceeds, the more evidence that it's giving that this is complete, because this is now not looking to be part of this 5-wave decline. So it's again incredibly early to be labeling this as a 1-2, 1-2 to the upside, but the longer that the market continues to rally and declining in these threes, it's adding evidence that this indeed 5-wave decline is complete. But how the market proceeds from here remains to be seen. All we can do is update that as the position unfolds to improve our understanding. But if we look at just quickly the 5-wave decline in the weekly chart, after that 5-wave decline we have a 3 ABC, we then have another 3 ABC, we then have another 3 ABC, now we have another 3 ABC potentially, and this could be labelled as a wave 1A, ABCX, ABCB, with this still potential outstanding C wave to the upside. That remains to be seen and is an incredibly long forecast into the future, because it's far too early to even suggest that, because we don't have a 5-wave advance that we could label as wave 1 of C. It is still too early to say that this is in fact what is now going to take place. But I've mentioned it in previous coverage, it is this price action here which to me is incomplete as a correction to complete this 5-wave decline. So although the focus is on Brexit and the coverage which has been in the press about sterling, etc., etc., the area that has my attention is the price action between May 2015 and June 2015, because this B wave has taken out the high of this A wave here, and this ABCA is an incomplete correction in my view for this 5-wave decline. But as I mentioned, it is incredibly early to start labelling and suggesting that we are indeed now in this C wave advance, because we don't even have a wave 1-2 yet that we could label with that degree. So it's a case of sit back and wait and to see how this unfolds, which will allow further understanding as this progresses, and we can continue to label potentially our series of 1-2s and see how it actually unfolds.